recession is here. Wait, is the recession here? That's something to be debated. None of the economists can agree if the recession is here or when it's going to come. And a recession is normally marked by two back to back quarters of declining economic activity. Unfortunately, some of the data that they are going to need to declare recession will not come until the recession comes. But you've probably already been seeing a lot of signals in your life, in your household, that something is coming. So, what does a slowdown in economic activity mean? Well, it means a few things. One, less production, less consumption, higher unemployment rate due to a financial crisis, just like what the pandemic did, as well as rapid changes in economic expectations. If you sit down, think about what your household is doing, you are probably already feeling some of these things. Inflation has most likely changed the way you buy and consume at home, and that's going to lead to lower consumption across the board. You might have already started hearing things at work where they are tightening budgets or being a little bit more strict with what's happening. There's going to be a lot of uncertainty in the next few months, and it's good to be prepared. Now, a recession is fairly normal. It happens every few years, and it's just part of the cycle of things. The word recession is a very loaded word. Our brains can sometimes think it's depression, and that triggers a lot of emotions. Emotions of fear, anxiety, uncertainty, and that all leads us to perhaps do some irrational behaviors. So in this video, we are going to walk through a few things you can do today to prepare yourself financially and ensure you come out of this recession financially stronger and maybe a bit wealthier. Thanks so much for tuning in. My name is Catherine Agapjan, and here at Sisters for Fi, we help you manage your money better so that you can live a life of impact today and tomorrow. Your first action item is to build up your emergency fund. Now, this is fundamental to personal finance, and the goal of your emergency fund is to really buy you peace of mind. You can argue that if you put your money in a savings account, you're losing money and you're losing the purchasing power of your dollar. But there is more power in having cash on hand during this uncertain time period. During a recession, your number one priority will to ensure you still have cash flow coming in. And cash will be your number one priority for many reasons. The first reason is because there's going to be uncertainty, there might be a likelihood that you either lose your job, lose some clients, or just lose a portion of your income, which can jeopardize your family and your living situation. With an emergency fund in place, you automatically give yourself more options. You also automatically give yourself the time and the space to make decisions for the long term instead out of fear or panic. And with an emergency fund in place, you are less likely to tap into credit cards to make ends meet, which can hurt you down the line. With an emergency fund in place, you are also less likely to sell assets at a loss. Your next financial move is to build up your credit history and your credit score. Normally, during a recession, the cost to borrow money increases. Currently, the Fed is raising rates, which is ultimately going to raise rates for borrowing for regular households as well. During a recession as well, companies who provide credit will start being stricter about who they lend to. They want to make sure you have a job. They want to make sure you can pay back what you're borrowing. Now, a strong credit history and score will make you stand out from the rest of the other borrowers. You can use your strong credit history and credit score to negotiate for better rates if and when you are ready to take on new debt. It also doesn't hurt that a strong credit history and score will follow you for the rest of your life in whatever other means you need to get credit for. Now, to boost your credit score, you can do a few things today. Pay all of your bills, at least the minimum, on time. You can automate this process. Next move you're going to do is to pay down your high interest debt. This is high interest, so you don't want it to be accumulating interest on interest. I mentioned before that cash will be king in the next few months, so you'll want some buffer in your budget for higher expenses as well as more savings, and paying down high interest debt can help you. Another thing you can do is to call up your credit card companies today and negotiate for lower rates now. This is good if you have existing debt, as it will save you money, but it also is just future planning just in case you have to tap into your credit card as a last resort. There are scripts online that can help you do this. The big thing being just try it, see what they say, and then try again a few months if and when you have improved your credit history and score. The next thing you're going to do starting today is to make yourself indispensable at work. As the recession looms, or even as a talk of a recession looms, many companies will start going into self-preservation mode for the uncertainty. And what this means is that companies will start to tighten their budgets, they will start to freeze hiring, and they may start to freeze raises. And of course, as a last resort, do layoffs. So your goal while still employed is to make yourself indispensable. Understand the incentives for your manager and your team and do your best to support that. Make yourself known as a team player. If you aren't one to tout your own accomplishments, if you have a hard time saying, I did this, now is the time to do so. The layoff process is done behind closed doors, and you want people championing for you, which means you want to make sure your manager, your VP knows that you are doing good work, hard work, and that you should be kept on. Start saving those emails from clients, colleagues, project managers, praising you of the good work you're doing. And if needed and necessary, start sending your manager a wrap-up email of all of the projects you've completed so that they understand and know everything that you're working on and that you are a very valuable part of the team. Your next action item is to continue investing. If you've been following the stock market in the last few weeks, even months, there's been a decline. And during a recession, the stock market normally declines as people liquidate to get cash, or as the fear and uncertainty prevent people from putting money into the stock market. Where there is volatility, there is also opportunity. And this might be the time to continue investing and get your money to work. If you have an employer-sponsored retirement account and they provide a match, continue contributing to that. If you still have cash available left after bulking up your emergency fund and paying down high interest rate, continue investing. You have the opportunity to buy at lower prices than before so that you have a chance to grow your investments. Now, this can easily be done through the process of dollar cost averaging, in which you automate your investments either a weekly, monthly period, and you just let that invest on its own. Before I share with you the last tip in our recession preparation, I want to share with you a story. And it is the story of my experience with the 2008 recession. Sometimes you don't know the effects of a recession until years from now, and it's very good to prepare. But back in 2008, I was 3 years into a job in IT support for a pharmaceutical company. I knew in my gut it was time to leave, so I interviewed and got myself a job at an ad tech company in New York City. I started the summer of 2008. And if you know the timeline of the 2008 crisis, a few months later, Lehman Brothers filed for bankruptcy, and that financial chaos started around me. I thankfully still had a job, but during the first year at my new company, there was no raises. There was a lot of budget tightening. So getting a higher salary wasn't as easy to do. But the company did continue to provide matching contributions to the retirement accounts. And they also offered an employee stock purchase program where you could purchase the company stock at a discount. And so I opted into that plan. Now, of course, during that first year or so, company stock was low. So it was low, plus 15% off. I was able to buy into a lot of company stock. I was still able to contribute to my 401k. And as the market improved, as the economy improved, all of those things started to go up. Sometimes you don't know the effects of the recession until many years from now. So it's good to be prepared. It's good to continue taking action. And it's good to not let fear get in the way. If this video has been helpful so far, give it a thumbs up, share with a friend, and let me know in the comments which action item you're working on. The last step in this recession preparation is to invest in yourself, meaning invest in new skills, upskill. What happens after a recession is that some businesses will most likely decline or die off. And you probably know in your gut already whether you are in this business or in that industry or in that position. So from now until then, you want to make sure you acquire new skills that will allow you to pivot if and when it's time to. While a recession normally brings about a lot of uncertainty, remember that there's also a lot of opportunity. So take these action items one by one, work through them, work to build up your financial foundation so that you can come out of the recession financially stronger. Thanks so much for tuning in. Consider subscribing to Sisters for Fi if you want more money lessons. We release a new video out each week. If you've got high interest debt, I recommend watching this video so you can put in a plan to pay those off before this recession is in full swing. And if you want to get ready for your investing journey, check out this video so you can get all of your accounts set up and be ready to invest.